Key difference between now and January 2021 is that retail has been slowly replacing institutional ownership. The supply side of the float is different. That is right, DRS shares completely changed the supply side of things on GameStop, which are slowly letting other things slip that are going to be called quote-unquote glitches. Because this gives hedge funds, institutions, market makers, short sellers in general, only 1/2 of the float to actually play with. Now there's a significant short interest, but retail probably won't unleash supply until wild price targets, and this is exactly correct. Retail won't release supply until wild price targets because we've been in this long enough and we've been through enough, and every single fund who's short in this will be bankrupt. So I'm happy you're watching this. If you're short on GameStop, you will be bankrupt unless you are the first to cover and get out of your position, so be a smart guy. Touching on that, GameStop's chart, right? The first time we ran to $500 in January, the only time you can see the same thing happen right now is right now. What I mean by that is the only time the cycle replays itself is right now, where we got that massive move. It also lines up with the smaller cycles that we've been tracking as well. However, they play out slightly different, and you can see the random volume spikes people have been complaining about all over Twitter, and you can see the glitches that Ortex is even talking about all over Twitter happening right now. And in my opinion, they are trying to suppress the price as much as possible. And if we zoom in on the GameStop chart, you will see that if I overlay the blue pattern right now, this is something that you will see. Only time will tell next week if we start scaling down amongst this trend line and get a pop after that, or if we essentially just get an immediate pop Monday next week. Both of these are completely possible, and in my opinion, next week should look good for AMC and GameStop. But this isn't a full-on price prediction video. I have a lot of information to go over with you guys. All I ask in return is to hit that like, hit that subscribe button, because 70% of you guys aren't subscribed to my channel, and you come back and watch my videos over and over again. I keep seeing it in the analytics. Why aren't you subscribing? It takes one click of a button. Also, drop a comment down below. I want at least 200 comments on this video. Let's get into it. So Ortex came out and said that they are investigating the whole GameStop lending data issue. However, there's one problem, and it's retail's comments. You guys are talking a lot of shit to Ortex in the comments. Please lay back a little bit. Maybe not you guys watching the video, but a lot of people are talking shit to Ortex, even though it is not their fault. Remember, Ortex is one of the only data platforms that we can sort of trust, so let's not break that partnership. Speaking of that, Ortex also touched on their RGME superstonk, or their R superstonk on Reddit, saying this: "We continue to monitor and investigate what is going on with the lending data, which has thrown a wrench in our SI estimation model. Clearly, SI did not increase by tens of millions of shares when today's total volume was 2.3 million. That said, we want to get to the bottom of this as well, and we are working diligently on behalf of retail investors." Okay, so Ortex is currently investigating this and working on it right now, but take a look at what they said. It is a problem with the lending data that threw a wrench in the short interest estimation model. Now, are some people's shares being lent out as IOUs? It's not covering for short interest, and you're seeing this reflect in a very small time frame as a conflict of interest sort of loophole, like when the halt happened on GameStop and you saw the share price for a split second be at like $1 million and something, right? When people's call options were up crazy for a split second. This is something that's slipping, and what I said in the beginning is that half of the free float DRS are allowing short sellers to not be able to play with as much wiggle room, and these slip-ups can happen. Hopefully Ortex gets down to it. Hopefully Adam Aaron announces something on the 8th, and hopefully, you know, one of these will be a big catalyst coming over the next couple weeks. And the reason I'm hinting at a next couple weeks is this tweet by Dave Lauer. He goes, "Here's a disturbing but not surprising thing I heard this week. A reliable source told me that a Republican rep recently heard from his constituents all about GameStop. The people had concerns about shorting, payment for order flow, and internalization, and all the craziness in markets. The rep went to one of the most senior RS in the House and said, 'My constituents care about fairness in the markets. What can we do about that?' He was told to forget about it because of their donors. You don't want to mess with these people. You don't know what you're wading into." So pretty much they are telling you that you really don't want to fight against them. You don't want to do this. Mind your business and forget about it. Well, Dave Lauer goes on to say that he's been talking about this for several months and things are unfolding, and they want us to not believe in the SEC. They want to dissuade you from the commenting process and question the motives of those trying to make changes, and there are already bots on social media doing this and stirring up FUD. Now, Dave Lauer closes it out with this, which is exciting. He goes, "The most transformational changes in markets in nearly 2 decades are going to be proposed in just a couple of weeks. These these changes will transform how and where trading takes place. These changes will undo the damage regulators did in the past. Now this is exciting. What are your guys' thoughts on this down below? Are you with the SEC or are you without the SEC? The way I see it, we only have two options: margin calls or SEC, or a little bit of both. Now, just to finish off with GameStop, what's interesting about this little contract of interest loop and these random volume spikes, etc., is that a bunch of shares were loaded up on these shares available to borrow side of things with a short fee of only 8.9%. And not only that, but these short exempts died down and got cut in half. Moving on from GameStop, US pending home sales changed month over month, actual minus 10% when it was expected to be minus 4%. Speaking of that, take a look at the home sales crashing right now. Here's COVID, here's us now, and here is the 2008 crash. In my opinion, there is a lot more wiggle room to go. Now, Bloomberg is posting articles like this: looking to buy a house, it's not the worst time. Personally, I think they are wrong. Let me know down in the comments what you think. I think there is more room to fall and that they are just trying to get the smaller guy to lose once again. I think mid-2023, maybe, perhaps, depending on what happens when that time comes, is a good time to buy a home, but not right now, as I personally think there's more room for housing market to fall, along with GDP, everything else, inflation to rise, etc. Twitter employees have been seen holding cardboard boxes outside companies' headquarters state they were laid off at. Here is the proof of that: these poor people being fired by Elon Musk. Speaking of that, Twitter will be delisted from the NYSE on November 8th, which is the same day as the AMC earnings call. Moving on from Twitter, BlackRock expects Powell to announce a 0.75 basis point rate hike, which will be on November 2nd, followed by two smaller ones and a pause to get us around 4.75. I also think they will announce a 0.75 basis point rate hike November 2nd. The amount of dollar-denominated bonds and loans trading at levels indicating distress is the largest since September of 2020. Here comes a wave of default. And demand for Series 1 bonds crashes Treasury Direct site ahead of key deadline as investors try to secure a 9.62% rate. And Japan just turned the money printer back on, announcing a $490 billion stimulus package to ease the impact of rising prices. And just in, Germany inflation reaches 10.4%, the highest ever recorded. We just saw that the Dutch banks were having a problem, and now inflation is at its highest in Germany ever recorded. Russia is calling for a new independent financial platform for international settlements. And finally, UK banks park $1.2 billion to cover bad loans as recession looms. British lenders adopt gloomier tone than European counterparts, and market isn't for the mood for surprises, said Redburn. Now we got like one more thing to touch on, but I figured I'd put this in the end of the video instead of the middle of the video so that you guys can watch it the full way through. A lot of you guys signed up, but you guys haven't deposited your dollar. Make sure to go do that and finish the sign up process. Guys, Moomoo is allowing me to give you guys 15 free stocks, but not only that, a $10 cash coupon for just signing up, depositing $1, and there's no step 3. That is literally it. So make sure to go do that. It takes 2 minutes. Each stock is valued up to $2,000 per stock. Even if you don't like those stocks, you're getting a $10 cash coupon to trade with as well. So load up on your favorite stocks, not financial advice. I will take the small dub on the options chain on AMC. 15,000 calls compared to 2,000 puts in the money on AMC. So we did beat the market makers on this one. As for touching on the SPY real quick, this is OA overlaid in the gray, and in my opinion, the SPY is not going to go back over 400, so even if it touches that next week, which that's still a stretch, I see a major rejection coming in the future, potentially on the next meeting on November 2nd. Overall, we're not going to look at the AMC chart because I've talked about it before, and I still think AMC and GameStop have a lot of potential coming into next week to snap the algorithms, get a huge volume boost, etc. Hopefully you guys enjoyed the video or taken something out of value from the video. Remember, if you're not smashing that subscribe button, don't come back here. Just kidding, I love you guys. Make sure to come back and enjoy the rest of your weekend for sure. Make sure to go compliment somebody, make their day, and just spend some time with family, friends, and loved ones, because it's not always about financials all of the time. However, make sure to mix in yourself being educated on certain things you want to be educated about and beat the system and keep your body healthy. That is it, guys. Hit the like on your way out. I love you all. Lottery Stocks out.